Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from CIBC Wood Gundy tells us transports have bounced back after a big hit. Doug Casey from Casey Research believes there are some super bargains in selected mining stocks, and he warns us about the dangerous bubble in bonds. We'll talk to Ross Clark right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
The stock markets, the transports were way down earlier, but have they come back yet?
Oh, yeah. This has been, since the early part of this year, the real weak part of the marketplace. You know, there was lots of leadership over in healthcare and biotechs and the semiconductors, and transports were doing nothing at all. They rolled over, gave us some concerns about a Dow theory sell signal. We still have that as a potential sitting out there. But last week we mentioned just how oversold these transports were getting, and that there was an opportunity for a turn. And this week, most indices, European, North American, were down, with the exception of the transports and the small caps. The Russell 2000 had a bit of an uptick there. So, looks as though, a bit of life. There's, for all that we are into the beginning of the summer doldrums and volumes are really dropping off, markets, are always going to have, some leadership out there. And at this point, it appears that the recent dog has got an opportunity to come back to life. Now, in terms of strength, the strength continues to be, though, fairly narrow over these days in the financials. You've got your U.S. banks, the U.S. broker-dealers doing exceptionally well right now. And, the idea is follow the money as long as it's trending well.
What about the Canadian banks?
Well, they topped out here once again, sort of with the transports very late last year and haven't done a lot since. Good hard correction, and they're just sitting here in a consolidation phase. Where you're seeing the leadership on the Canadian side on the financials is into your life cos. The life insurance companies clearly benefit as interest rates are rising, because they have all these long-term obligations that they have to pay out, and the low interest rate environment that we've been in has definitely been a headwind for them. And with the bond market having rolled over this year, they have been stair-stepping up. Pretty much any one of the names you would look at in actually U.S. or Canadian on the life insurance companies are doing very well. I would think that with our outlook that bond rates still have higher to go, that one should be looking at buying minor corrections within this sector.
The IMF has asked the U.S. Fed not to hike interest rates for at least another 6 or 7 months. Does the Fed have that much control over interest rates?
Well, the Fed, most of the time the Fed is a follower. If we take a look at it, this bond market really has been the leadership as far as the interest rates are concerned. If you go back and you look at the Fed funds rates and the long bond rates, the 10 and 30-year rates, over the years, typically you'll see the bond market turn first, and 2 to 3 months after that, you'll see the Fed kick in with its move on rates. Now, the exception that we had was 2 years ago when the tapering was announced, and that clearly had an impact from the Fed. But in most cases, it's the bond market that is the leader, and we have clearly been seeing rise in those rates, in particular in the U.S. Since the first of this year.
How have the currencies been doing?
A lot of volatility. This was the week for GDP numbers last week. This week was the week for the employment data. A lot of volatility. And, I'm thinking that this is pretty much the norm. Once you've had a move like we did in the preceding year, from May of last year through March, you had 9 consecutive months of higher closes in the U.S. dollar, made it as overbought as we've seen in decades. And, once you've had a trend that's been that strong, the normal reaction is to go through a broad, very violent consolidation, and that's exactly what's happening. The swings have been fairly big. You've got 5 to 7% swings pretty much every month right now as we're thrashing and absorbing that move that happened last year. We think it'll eventually resolve to the upside. But what you want to watch for, as I mentioned, is within a trend, look for items that are really sustaining the trend the most, the ones that have the most underlying bias to them. After they consolidate, will then start the next move in a fairly concerted way. And the most recent example would be that as the dollar has been consolidating since March, the one item that could not rally back against the U.S. dollar was the Japanese yen. And in just the last 2 weeks, the yen, after not rallying the 5 or 6% like the other currencies, it just, from that tight range that it was in, it gave up 6% to a brand new low. So the whole concept of follow the leaders in terms of direction and be on board the strong trends or the weak ones in the case of ones that are going down can work quite well.
Ross, thanks a lot for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark from CIBC Wood Gundy, Vancouver. If you'd like to get a hold of Ross for any investment advice, his email address is ross.clark@cibc.ca. Coming up next on This Week in Money, Doug Casey.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Doug Casey, founder of CaseyResearch.com. He's on the line with us from Aspen, Colorado. Doug, welcome to This Week in Money.
Thank you, Jim. It's a pleasure to be here with you.
Well, you won't be in Aspen for long. You are coming to Vancouver, July 28th through the 31st at the Sprott Stansbury Vancouver Natural Resource Symposium. What do you plan to be doing at the symposium?
Well, we're very fortunate at the moment in that mining stocks are essentially at one of their all-time lows. Since the market for gold was freed and the dollar was devalued in 1971, there have been about 7 or 8 major bull markets followed by really major bear markets. And I think we've just completed one of the worst bear markets, and there's some real value up there. Now, it's true that out of the perhaps 1,000 so-called mining companies listed in Canada, 90% of them have no value at all, really. But the 100 that do have value at this point present excellent value. And with the trillions of new currency units that governments all around the world are creating, I expect there's going to be a bubble in precious metals especially, and perhaps a super bubble in these tiny little stocks that explore for it and the few that mine it. So I think this is a very good time to get back into the market.
Is there a lot of new gold to be discovered?
Well, that's an interesting point that you make, in that people have been looking for gold for thousands of years, and the whole world has been pretty well cherry-picked. I mean, during Roman times, a deposit wasn't economic unless it was about an ounce per ton, and the equivalent for silver, too, of course. Now with high technology exploration methods and so forth, we can effectively mine a deposit that's not just 1/10 of an ounce per ton, but even 1/100th of an ounce per ton under some circumstances. So we found most of the easy to find deposits in the world. That's a very good point. That's why the average all-in cost of mining is $1,000 or $1,200 per ounce at the moment. The world is pretty well cherry-picked.
Those TV shows showing miners in the Yukon or siphoning up gold in the Bering Sea, are they the leading edge of finding the new gold, or is that just sort of a side show?
That's really a side show because those guys are almost exclusively placer miners. And placer mining can be very profitable as a hobby if you can find one of the few remaining decent placer deposits that haven't picked over. But it's very, very hard, if not impossible, to establish reserves for placer mining. So it's not something that a public company can go into because it's entirely too unpredictable as to size and grade.
And besides, I would think regular mining would make for a dull TV show.
That's right. Regular mining is just hard work, where either you're deep underground where it's dark and cold and wet and noisy and dangerous and pretty boring. It's just hard work. Or else you're digging around the big pit with large yellow trucks. And so, yeah, mining is just, it's not really very romantic anymore. It's just hard industrial work.
Going back here for a second, Doug, you've made some changes at Casey Research. Maybe outline those for us.
Yeah, well, things needed to be changed, and that's what's happened. I've teamed up with my old friends at Stansberry Research, which is a fantastic outfit, and we're expecting to greatly improve the quality of our products and grow further in the future. So I'm very happy about that.
Does it look like the precious metals markets are about to heat up?
It does to me. As I said, we've had a nasty bear market since 2011, 2012, really. And these things are cyclical. And you've got to remember that back in 2001, in real terms, gold was cheaper at $260 an ounce than it was at $35 an ounce in 1971 because the dollar has lost so much value. So in real terms, relative to all other prices, gold was actually cheaper in 2001 than it was in 1971. Now, it's true that gold has gone up 5 times in price, approximately, since then. So it's not the giveaway bargain that it was a decade ago. But on the other hand, the world economic situation today is far more unstable, far more risky than it was in 2001. And it was pretty risky then. So I think that you should buy gold primarily for conservation of capital. It's the only financial asset that's not simultaneously somebody else's liability. And in a world where all the banks are bankrupt, in point of fact, because of the institutionalization of fractional reserve banking, and all the central banks are almost criminally insane with the amount of new currency they're creating, I think the foundation of your wealth should actually be in gold at this point.
Now, what does that say about precious metal stocks?
Well, I think that they're an excellent speculative vehicle. They're not an investment because mining is a terrible business. It's a 19th century choo-choo train business. I mean, it's not what it used to be. It used to be people who said, well, that's like finding a gold mine, referring to something being a wonderful business. Mining is a horrible business. In today's world, it takes years and typically millions of dollars to find a deposit. Then it takes millions and millions more to drill it out and prove that it's economic. And even if you think it's economic, you don't really know until you put the mine into production. And today, mines cost not just millions, tens of millions, even hundreds of millions to put into production. And once you put it into production, you're a sitting duck for taxes and regulations and NGOs. It's a horrible business. But that said, mining stocks are cheap enough now that they're an excellent speculation. And I think a mania could build up where these things go 10 to 1 easily as a group from where they are, with individual companies going 50 to 1 or 100 to 1. It's happened many, many, many times over the last 40 years since the price of gold was freed. I think it'll happen again.
Are junior stocks showing signs of life?
There are a few that have actually doubled or even tripled in the last 6 months. So these are like early flowers in the spring. I think it's the time to get in, but you've got to be careful. I developed actually a mnemonic called the 8 Ps, which are things when you look at some stock and it's being promoted to you that you ought to examine before you put your money in the company. The first of these is people. Who are the people in back of the company? Have they discovered other mines in the past? Are they competent? Are they honest? So most people never even look at that. They don't go much beyond the smile and the shoe shine when they're being promoted. Then there's the property. You've got to look at the geological characteristics of the property and whether it could be economic. The financing. Does the company have any money? Can it raise any money? Is the share price so cheap that if you buy the shares at this price, you'll be diluted out of existence? So there are a lot of things to look at with these little companies. You can't just throw a dart at a board and hope to get lucky.
Some investors really seem to do it that way. Is examining management one of the very key things? If you have the chance, go talk to them like you would at the conference coming up in Vancouver.
Well, that is the big advantage of going to these conferences, is that you can actually eyeball the management and size them up person to person and ask them questions. So if you're serious about getting into these stocks, you've got to go to these mining conferences. They're excellent values, and all the companies exhibit there, and they're anxious to talk. You'll get a tremendous education just listening to them tell the stories. So yes, it's critical, and since now is, I think, an excellent time to get into the market. That conference in July, I mean, it should be bumper to bumper with investors looking for value, but it won't be. It'll probably be empty. That's what happens at the bottom of the market. It'll be full of people at the top of the market when people ought to be selling this stuff. Now, when they should be buying, there'll be very few people there, which is all the better for the people that do go there, of course.
When you go to one of those shows, should you have a list of questions you want to ask potential people that you want to get into?
Well, I think you should have the 8 Ps tattooed on the back of your hand so you don't forget to ask any of them, of the company's executives that you're talking to. Sure. But listen to the stories of all these companies. And after a while, you'll develop some expertise in separating the wheat from the chaff.
Yeah, I know it's pretty easy to just wander around, though, and be a little confused because all the displays look pretty enticing. The people look pretty flashy. Should you look more for more bang than flash?
Yeah, and of course that's the key. I mean, which story is technically correct and which is believable, and who are the good guys and who are the bad guys? You've just got to do some homework and research this stuff. And it takes some expertise. I mean, just reading the company's brochures, they all sound good. And sometimes they confuse you with razzle-dazzle and technical terms that mean nothing in the context of what they actually have. So when you go to the conference, just wandering around the booth isn't terribly productive. Hopefully you'll already have an introduction to the companies that are worth spending the most time with, so that the 8-hour day that you spend there is not misallocated among companies that are a complete waste of time.
What's the better bet right now, gold or silver?
That's a good question, of course, and it's a perennial question. Right now, let's say silver's at $16, and let's say the gold is at $1,200. So the ratio between these two metals is roughly 75-1 right now. Historically, silver is extremely cheap. And there are other advantages to silver. You got to remember, it's primarily an industrial metal. Whereas gold, although it has lots and lots of industrial uses and more every day, frankly, it's a high-tech metal in today's world. Gold is primarily, always has been, and I think always will be, a monetary metal. So silver is a better high-potential speculative vehicle. Gold is a safer, more secure, conserve your capital type of vehicle. But as cheap as silver is right now, I don't see how you can get hurt. The only problem with silver is that in order to have significant capital in silver, it takes a lot of silver. And you've got to have a safe place to store it. Well, you've got to have a safe place to store your gold, too. But, same value, silver takes 75 times more space.
Speaking with Doug Casey, founder of CaseyResearch.com. Doug, what do you think's going to happen first? Gold will hit $1,000 or go all the way up to $2,000?
I think that gold has already bottomed, and it's bouncing along the bottom now as we speak. So I feel very comfortable accumulating gold aggressively here. No, I mean, it's possible. Could it go down to back down to $1,000 an ounce? Sure. We could have a catastrophic credit collapse where banks fail and people need because the world is very much in debt. Everybody owes lots of dollars at this point, and we could get into a situation with bank failures and bond defaults where people need dollars to pay their own debts, and they'll sell anything in order to get the dollars to pay their debts. Well, in that case, yeah, sure, gold could go down. But at the same time, we go into that type of situation, that's exactly when people are going to want to hold real wealth in their own hands that's not being inflated out of existence. So, like I said, anything can happen, but you have to play the percentages, and I think that we're at the bottom of the bear market for both gold and silver at this point. So next step is 2,000, not 1,000.
Goldman Sachs, it seems to me, every year lowballs the price of gold. Why do they do that?
Well, I don't know. First of all, they don't believe in gold. Most conventional brokers don't believe in gold as a monetary metal. So you have that philosophical animus against it. And they're in the business of selling stocks. And when people allocate capital towards gold because they're afraid the economy might collapse, which indeed it might, it's taking bread out of their mouths. So, of course, they're perennially negative towards the metal. They don't understand it, and it doesn't work towards their own economic interests.
Of course it doesn't. Do you think people think for themselves and are intelligent enough to do it, or is it not just a case of intelligence, but wisdom to go along with it?
Well, you know what they say. The average person is not very smart, and unfortunately, 50% of the population is less than average by definition. So I don't know what to think. I think the average guy is quite capable of running his own life reasonably well to very well. And that's what we should all do, is run our own lives. The problem is when people stick their noses into public policy matters, which basically means telling other people what to do and trying to manipulate other people's actions. Typically, that's why the worst people get into government, because they like to impose their notions on other people. That's my answer. It's that almost anything the government does is probably against your interests as an individual, regardless of how they may couch it. And you'll certainly have to pay for their silly ideas, in addition to following their silly rules. So that's another reason to own gold, quite frankly. It, to some degree, insulates you from the actions of government. I'm not sure if I answered the question exactly directly, but...
Are governments and central banks and the big banks just a little too cozy?
Sure. Central banks should be abolished. They serve no useful purpose. 100 years ago, there were only about 3 central banks in the entire world. And they basically served the purpose of acting as a clearinghouse, in between commercial banks. So that's a useful purpose. But now, they control and regulate, the amount of currency in existence and, interest rates, which is insane. So central banks should be abolished, yes. And, commercial banks should, go back to having 100% reserves, not being fractional reserve banks where they can, in effect, lend the same dollar many, many times, which makes for a very, very unstable situation if any borrower defaults along the way. So the whole system at this point is unstable and corrupt. And that's my answer. Abolish the central banks. And banks should be run like ordinary businesses.
What about the lawsuit in Canada where people are trying to have a class action suit declare the Bank of Canada actually the Bank of Canada, where the average person could borrow from them at their central rate of 0.75%?
If you're going to have a central bank, sure. I think that'd be fine. But how can the Central Bank of Canada look at the loan applications of everybody in the country? I mean, it's not feasible. The answer to the question is, I understand what they're trying to do. So the little guy can borrow as cheaply as the big guy. I understand that. And of course, I applaud the thought in back of that. But the real solution to the problem is to abolish the Reserve Bank of Canada, not to give it extra things to do.
We keep hearing governments want us to go to a cashless society. Why do they want to do that?
Because if you can't use cash and everything has to go through an electronic bank account, whether you're buying a hamburger at the store or anything, paying a wage, anything, that's what they'd like to have happen. They can keep track of exactly what you own and what you're spending and what you're earning. And they control it. Because at that point, if all of your financial assets are digits in an account, if they don't like you for some reason, they can block it, and you're out of luck. So it's not that I'm against technology advancing in that direction. I'm against paper currency, and I'm against government controlling and monitoring what everybody's doing. But to answer your question, yeah, they're going in that direction, and it's very disturbing.
Is there a danger if they decide to go cashless that the mob or somebody else like that will develop their own currency so people could still continue to have some kind of a cash transaction?
Well, if the mob does that, I applaud the mob. I mean, the mob would be acting like proper, honest businessmen, fulfilling a need in the market. Sure, That's one function that Bitcoin serves. Quite frankly, Bitcoin's got problems as a currency because it doesn't have any tangible value in itself, but still it serves a useful purpose, and I'm all for Bitcoin for that reason in that function.
What kind of a state is the U.S. dollar in? Is it still going to rise in value? Has it reached its peak?
Look, the dollar is a floating abstraction. Eventually, it's going to reach its intrinsic value. And since it's not redeemable in anything by the entity that issues it, it used to be, before 1933, every $20 bill represented an ounce of gold. And that was the case, and at least not to American citizens after 1971, but at least to foreign governments, they'd redeem every dollar for a 35th of an ounce of gold. Now, they'll give you absolutely nothing for it, not even silver, not even copper. There's no copper in pennies anymore, because even copper is too valuable. So the dollar is going to reach its intrinsic value eventually, and that's nothing. So the strength in the dollar is a temporary phenomenon, because markets function. They fluctuate. So no. If you bury $100 under your mattress and dig them up in 50 years, maybe you'll be able to buy a pack of gum with them if you're lucky.
What do you see happening with the bond market?
That is a gigantic accident waiting to happen. And I pity the poor fools that are buying bonds or even own bonds at this point. The central banks have driven interest rates to zero, even in some cases negative levels. It's the biggest bubble in world history, and people have forgotten that back in the early 1980s, even government paper was yielding 12 to 18%. It'll go back to those levels again. And when it does, it means that the price of bonds fluctuates inversely with interest rates. So I think about the worst thing you can do today is own bonds.
Do you see any hope in the 2016 presidential candidates that we've seen so far?
No, they're all midgets. And it wouldn't matter if Ron Paul was elected. It wouldn't do any good at all, because if he did anything at all that he says he'd do, he'd have a sit-down with the heads of about a dozen Praetorian agencies, like the NSA and the CIA and the FBI and the DEA, and a whole bunch of generals and admirals, and they tell him the way these things work, and he'd better listen to their advice if he hopes to survive personally. And if he did, for some reason, survive, he'd be impeached by the Congress. And if he survived the impeachment, which he wouldn't, the average American would pile out into the streets, because the average American now gets more from the government than he pays in taxes. In fact, a huge number of them, 100 million, pay nothing in taxes. Not that I approve of taxes, but they do nothing but act as parasites on the rest of society. So, no, it's gone beyond the point of no return. Forget about that.
What about this trend where they plan to have robots replace people and have automatic cars that drive themselves so you don't need taxi drivers?
Wonderful thing. I think things like Uber, which replaces taxis, and Airbnb that replaces hotels and increases the convenience and cuts the costs while providing entrepreneurial activities for people to provide the services. All these things are wonderful, and robots are going to be the next step in all of this. It's going to serve to greatly increase the standard of living of the average person. It's marvelous. It's wonderful. I'm a technophile.
Where's the average person going to work if robots are doing it?
I don't know. Where the average person that was in the horse business, what did he do when the automobile came into existence? It's the same thing. Look, the answer is very simple. You and I and everybody else out there have an infinite demand for goods and services. If you have one car, you want a bigger one. Then you want a Ferrari. Then you want two Ferraris and maybe a Lamborghini and a bigger house. And there's no limit to the goods and services that we all want. So forget about that. People are going to have to figure out what goods and services they can provide for other people. And thank God that robots and machines and computers are going to be doing the scut work of the future. This is wonderful.
Is the growth in solar power and electric cars jeopardizing the fossil fuel industry? Will their prices ever bounce back?
Sure. Well, this is a question that demands a lengthy answer. But look, basically, fossil fuels are they're carbohydrates. They're nothing but carbon and hydrogen. Okay. Hydrogen is the most common thing in the universe, and carbon is one of the most common things on this planet. So in the future, humans will be able to, with enough power, which will come from the sun, will be able to create their own hydrocarbons and so forth. So I'm not worried about that. But I do think that hydrocarbons in their concentrated form as oil and coal and so forth, they're very valuable. So I think it's wonderful that they're conserved for more valuable purposes than burning them in utilities and so forth. But I'm not worried about these things. The market will provide solutions to all of this as long as regulations don't make it impossible and taxes don't destroy so much capital that engineers and scientists can't create the devices that are needed to take advantage of them. Now, these are non-problems.
Costco has announced it wants to be your organic food provider. Is this announcing a trend for big corporations to move away from GMOs and pesticides?
Yeah, I think the average person is learning more about what constitutes good food and whether he's got the discipline to eat good food and the money to afford it, quite frankly. That's another element. Sure. The market is going that way. People have got to remember that big corporations are not intrinsically your enemy. The only way they can make profit in a free market is to give you what you want. So the market wants more healthy organic food. So they'll get it. The key is you've got to yourself create enough goods and services so you can afford it. Otherwise, you're going to be stuck eating junk food. Is
water going to be the big resource of the future?
Well, look, once again, water is just hydrogen and oxygen. I'm not worried about it, and it's nothing that ingenuity and the market can't solve. The main problem with water we have today is political, where governments price water at ridiculously low levels, and when something's priced too low, people don't economize it, and they waste it. That's the problem with water in California and water in most places. But there's plenty of water in the world. So the problem is political. It's not physical with water or economic. It's strictly political. When you look at the water shortage, I promise you, at any time, it's going to be a political distortion that's been created.
I mean, I've always wondered why California doesn't have giant underwater reserves or reservoirs, so when they do have their flash floods, that water flows to someplace you need it rather than the ocean.
Well, look, the ocean can be desalinized, too. I mean, it's nuclear power is by far the safest, the cheapest, and the cleanest form of mass power generation. But because of government intervention in the nuclear power industry over the last 50 years, we're still using nuclear power plants that are like 2 generations behind the optimal, and they're problematical for that reason. It's like we're all forced to drive around in 1955 cars, except it's worse. So these things are non-problems. The NIMBY movement and so forth, they're all political problems, quite frankly. Whether it's building large solar farms or the price of electricity, all of this. I mean, Einstein said that after hydrogen, the most common thing in the universe is stupidity. And whenever a new law is passed on economic matters, typically, what he said is, put before your eyes.
Well, I saw an article in National Geographic. If we made little phone booth size atomic power plants that used helium, they would be safe because helium can't become radioactive.
There are a dozen technologies out there that are waiting to be used, but they can't be used because of laws, regulations, the NIMBY movement, generally speaking, fear of technology. Sure, all these problems have solutions in today's world, and certainly in the world of the next couple of years. I'm not worried about these things at all. I'm worried about, like I said, I'm not worried about a lack of hydrogen. I'm worried about a superabundance of stupidity.
Well, Doug, perhaps one of the ways around the stupidity bubble is to get more information, and that information could come from you. How can I find out more about KC Research?
Well, thanks, Jim. Just go to kcresearch.com, and we have another website which I think people might enjoy, called internationalman.com, which talks about the advantages of diversifying your assets internationally, because as dangerous as the markets are today for your wealth, your biggest danger is political and your own government. So it's critical that everybody internationalize. So those two websites, if you go to KC Research and the International Man, we have lots and lots of free information. It'll keep you busy for days.
Doug, thanks a lot for chatting with us.
Oh, my pleasure, Jim. Nice talking to you, too.
My guest has been Doug Casey, founder of KCResearch.com. Well, that wraps up the show for this week. Thanks to our guests, Ross Clark and Doug Casey, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.